Notwithstanding the big pop in oil prices we saw on Wednesday, oil down about 20% from the mid-July highs, while the S&P 500 has popped by about 4%, although this week coming off pretty significantly from 5-week highs. Daniel Frishberg along with us now is the Chief Investment Strategist at Ladford Frishberg Wallace, also known as the Money Man Report on the Biz Radio Network. Daniel, nice to see you. Talk to us about the overall market environment you hear shaping up in the third quarter.
This is one of these very strange markets because a lot of times they're aligned. Right now, you have a little bit of negative. You're going to probably pull back a little, but I think if you were looking out a year or two, our prospects are going to be very good. The problem is I can't really tell how far down we're going to go on this short-term pullback, and so I wouldn't really want to be caught in it. And a lot of people who get too bullish too soon could lose a lot of money and get knocked out.
Well, let's take a look at a 1 to 2 year time frame then. And you are interested in small caps especially, which tend to be the early cycle mover.
Yeah, actually, small caps have been the easiest way to hedge your portfolio because they've been going down worse than anything else.
Right.
And it's easy to see why. If financing is a problem, most of them have very good prospects, but they have to be able to get the capital to be able to produce. If they can't, they go out of business, they have big problems, and that has been holding them up. So small caps get very badly hurt in a financing crisis in a tight market. As it loosens up, they're the ones who benefit the most.
And one of the picks you have is twice the Russell 2000.
That's right.
So you're looking for a little bit of leverage here. And what's the time frame do you have for it?
Well, I think we're just starting to have that turnaround, and even when the market goes down, probably those small caps are going to be affected less. If you can't handle the pain, I would say wait until a real big selling climax,
Looking
which
for
is
a
likely.
washout, a capitulation.
Yeah, you could wait for that if you really don't like to go through a lot of pain. But for a long-term investor, it's probably a good idea to start nibbling a little bit, buying a little bit, buying a little bit.
Couple of technology picks you also brought along. One specific one is Corning, the old Glassworks. What do you like about this one? What puts this one in the sweet spot of the tech market?
Well, mainly it's the market action that I like, but what's happening is that...
By that you mean the price action?
Yeah, the fact that people are buying, buying power, let's say, demand for
momentum,
the stock compared to other stocks. But there's a good reason for it, because flat panel televisions, there's a mandate, as you know, where...
not for flat panel television, but
no,
for digital
but
television.
That's right.
February
But it looks like a good time to go ahead and update your television.
Okay.
And if you go into the stores, you will see that although a lot of people's televisions are going to work, you would get the impression from reading all the advertising that whatever you've got, it's not going to be any good. You need to update your television.
So Corning's a play on the DTV.
That's right.
Gotcha.
They produce the glass.
And then you're looking for the semiconductors, and again here using a little bit of leverage, trying to use an exchange traded fund that goes twice the semis. What about the semi-replacement cycle here that gets you excited these days?
Well, I think it's really more than that we've been off that for a while. The companies, as the economy does pick up in the world, and remember, this is the most important part of that. Let me answer that a better way.
Okay.
The U.S. economy is really kind of meaningless for us. There is no real U.S. economy. There is really no U.S. Yes, there is no U.S. currency. There is no U.S. anything really. What matters to you is your town and the global economy.
Right.
And we're in a global economy that's growing at 5-6% a year, which really is larger than any economy.
So the semiconductor play is less of a cycle in technology, but more of a global play of technology?
Yeah, but the cycle part has to do with our moods, because we've been so down on our own economy and our own market that these things have been sold unmercifully, and people forget that they're instrumental in the global growth. Dare you call
semiconductor value-oriented then?
For the moment, I would say it is,
All right, fair enough. Daniel, we'll leave it there. We'll have an extra stock pick online from him. Join us there at FirstBusinessX.com. Daniel Frishberg, the Money Man Report at Biz Radio Network.